Are investors setting realistic price expectations for commodities? Joining us today from Bloomberg headquarters, Mike McGlone. He's the senior commodity strategist over at Bloomberg Intelligence. Mike, good to have you back on the show.
Thanks for having me, Daniela. Sorry I can't be with you in the studio, but you got me at Bloomberg HQ.
We'll take it. We'll take it, Mike. So we have a lot of things to cover today. Let's start with the current S&P 500 level. It's a heavy one here, but compared to its historic average right now.
Yeah, well, that's the thing I've really published this week is focusing on the mean that matters. And the key mean that really mattered in the S&P 500 is the mean that started with the Fed rate hike, which was December 2015. That was essentially the low last year, right around 2,400. The significance is the market's now about 20% above that. In September, when we put in the peak, it reached 22% above that. So means are always subjective, but in this case, it's pretty significant. And I've kind of used that to trickle down into the other commodities.
Well, talking about commodities now, you've shown that oil, gold, and copper are all trading above their historic average. So are we going to see a broad mean reversion to the market soon?
Well, that's the thing. As a commodity strategist, the key thing I'm fearful about is potential mean reversion in the S&P 500. For example, the crude oil, basically crude oil futures, WTI, for the last 20 weeks has been correlated to the S&P 500 at a ratio of 0.82. The historical average is 0.3, so it's like triple the historical average. It's very high. And it recently just put in a pretty significant top. For the week, it's eventually an outside week down. And also, if you look at crude oil, it's oversupplied. I mean, what really was a story earlier this week was the U.S. reducing the waivers on Iran sanctions. And the U.S. is doing that because they have the upper hand, notably because U.S. production, essentially, the increase in the next year or two will probably be equivalent to Iran's total production.
How about shifting over to cryptocurrencies now, Mike? Bitcoin has rallied 60% since its 2019 lows. Is this an overdue correction or start of a new uptrend?
Yeah, I think it's an overdue correction. Unfortunately, if you look at Bitcoin's mean that really matters, it's the mean that has really held since the beginning of 2017, and that comes in right around 5,500. So to get above that, that would mean something. It would mean finally got some oomph. All these people have held for since that frenzy are doing something, but it's held the highs. In addition, my key indicators like transactions, addresses used, most of the key things I watch that are really good, that were good indicators last year for bear market, still point down. So I'm worried that Bitcoin is going to continue to head towards the other significant mean, which is near 1,600, near the price of gold, basically where it started in the beginning of 2017.
All right. Well, do you think Bitcoin could ever return to those 2017 highs that we saw in December?
Well, I never say never, but I think it's very unlikely. The way we see it, the way I look at it, is this hangover this year should be more enduring than any one in the past. And what you've seen recently with the issues with Tether being subpoenaed by the New York Attorney General, it's just part of what's really happening in this space. We need to have a little more regulation. It needs to basically clear out some of the excesses, and it looks like that process is just beginning.
All right, Mike, before I let you go, I feel like we touched on everything but silver. Do you come bearing good news for the silver bugs out there?
Well, silver eventually someday. I'm kind of really focusing on gold this week. Right. The mean that matters for me in gold is the one that really started with the Fed tightening, and it has been coming in around 1260. We had a major test this past week, market bottom near there, and it's held above it. So just sustaining above that mean, to me, means it's ready to break out above new highs eventually. And all it needs is the dollar to really stop going up. And at some point, the VIX, the volatility of the stock market, to stop going down, and that's very low. It was just last week, the VIX was the lowest level below its 200-day average in about 2 years. So I'm still positive I'm going to go. That someday it's going to rally, and someday it's going to break out. And we're kind of watching this level as the first indicator.
All right, Mike McGlone, I appreciate your comments. Thanks for joining us today.
Thanks for having me.
And thanks for watching. We'll be back tomorrow.